A brand new report just came out from institutional investors about where they are putting their money right now. It goes over where they put their money in 2021 and in particular what they're doing with Cardano, Solana, Polkadot, and a couple of other of our favorite altcoins last week. And a couple of things have changed dramatically that I think you're definitely going to find interesting because they could be indicating where prices are going over the next couple of weeks. So if you enjoy this sort of content, please be sure to like the video, subscribe to the channel, and let's jump right in. So first off is the overall crypto market right now is sitting at a $2.24 trillion market cap. We've seen Bitcoin's price drop down and test this $45,500 support a couple of times over the last couple of days. The important thing here is that every single time we have seen Bitcoin's price drop to this level, it has been pushed back up by a lot of buying pressure immediately. Every single time this has happened, and this is important because this $45,500 per coin line and this support is also exactly where the 1.472 Fibonacci level is, and this has historically acted as a very strong support and a consolidation level in every single bull market that we have seen, in every single cycle we have seen for the crypto market. So right now it is important that we maintain this level over the coming weeks as we continue to consolidate and prepare for a breakout in the crypto market. One thing I want to talk about though is Bitcoin's illiquid supply. So the other day we mentioned how Bitcoin's illiquid supply right now has been continuing to increase. What this means is that about right now, according to the data, 76% of the total circulating supply of Bitcoin is illiquid, meaning that it is not easily available to be sold. So it's like in cold storage, hardware wallets. And this means that most people are just accumulating and moving it off of exchanges. This is key because whenever we see people moving Bitcoin off of exchanges and that illiquid supply continues to increase, that means that people are bullish on crypto long term and ultimately is just helping us and preventing a mass crash from happening, because we're not going to see a massive correction or a massive crash happen if 76% of all the Bitcoin available to be bought and sold right now is not even on exchanges. This means vast majority of people are holding their Bitcoin off of exchanges in cold storage, and it's not easy for them to just go ahead and sell it. So even though we've seen a correction happen in the market, we still are seeing this illiquid supply continuing to increase. We're seeing all of the available Bitcoin on exchanges continue to decrease. So that is a very bullish sign for anyone who's on the fence about getting in the market right now. The good news is that really a mass liquidation event, a big crash, is off the table at this point now that we are seeing this supply, this illiquid supply, continuing to increase. Next thing I want to talk about though before we get into this report is going to be with Bitcoin and what is going on with Goldman Sachs, their predictions. So Goldman Sachs, in a recent report released to investors at the start of 2022, they explained how right now Bitcoin is really taking away some market share for gold, because in 2021, we saw that Bitcoin yielded 60% return for investors while gold was negative 4%. So what they're predicting is that Bitcoin is going to increase to just over $100,000 per coin. Maybe not this year, but they're predicting more conservatively that it will definitely happen in the next couple of years as more and more investors look towards Bitcoin as opposed to investing in gold. So they're saying we're continuing to see this trend happen, and for that reason, they are predicting that $100,000 per coin Bitcoin is imminent. It's going to happen. Is it going to be in 2022? They don't think it's definitely going to happen in 2022, but they say it is going to happen, and long term, they're expecting Bitcoin to outperform gold, have annualized returns of about 18 to 20% over the next couple of years. Now I want to talk about what's going on with this brand new report. So CoinShares came out with a new report about what's going on with the overall crypto market, where institutions have put their money in 2021 and in particular last week. So in this report, they explained how the yearly inflows for Bitcoin were $9.3 billion in 2021, which was a record-breaking number. We have never seen that high of inflows, that much money pour into the crypto market ever. $9.3 billion 2021. This was compared to $6.8 billion in 2020. So we saw a 36% year-over-year increase in how much money institutions are putting into crypto, and they don't expect this to slow down anytime soon. The other interesting thing that we have seen is that the total number of coins in investment products for institutions have increased from 9 to 15. So almost doubled the amount of exposure institutions can have to crypto without investing directly in it, meaning that there are like Grayscale Bitcoin trusts, Grayscale Ethereum trusts. There's all these different investment products that make it very easy for institutions to invest in crypto. And now they have expanded offerings. So it's no longer just Bitcoin, Ethereum. There are, Solana. There's so many other ways that the institutions can easily invest in crypto. The most important thing, the interesting thing I wanted to point out with this report is what happened last week in particular. So last week, the week ending the first week of January, right around there, we saw that there was $32 million of outflows. And this is the third week in a row that we saw outflows. But the important thing here is that outflows have started to decrease. So a couple weeks ago, we had much higher outflows, right around $100 million. But now it has started to decrease, showing that the tables are turning, that the sentiment is changing a bit in the overall market. People are consolidating and starting to get a little bit more bullish, institutions. The cool thing about this report, though, the one aspect that I really wanted to point out was what is going on with Cardano and Solana and Polkadot. Because when you look at this report right here, Bitcoin had $7.5 million of inflows. Ethereum had massive outflows of $61 million. But other layer 1 ecosystems have started to see pretty significant inflows. For example, we saw Binance have $20.2 million of inflows, Solana with $3.3 million, Cardano with $3.1 million, Polkadot with $1 million. So what we're seeing is a little bit of a rotation out of Ethereum into other layer 1 ecosystems. And we've talked about this multiple times, but this is why I am so bullish on projects like Cardano, like Polkadot, like Cardano, like Solana, and even Polygon, which is a layer 2 ecosystem, because the data is showing us that people are shifting out of Ethereum and starting to get more into other layer 1 and even layer 2 projects. So Polygon is at the top of the list. Solana, Cardano, Cardano, Polkadot, all of these have started to become top picks for institutions. And it's interesting to see this because if you're looking for massive returns in 2022, I would say, if you look at the trends, institutions are rotating a bit out of Ethereum, and while I'm very bullish on it, I think everyone should own it. I think there will be higher returns to be made with some of the other layer 1 projects out there. So that's what's going on with crypto. Hope you enjoyed today's video. Let me know your thoughts on all of this, but that's really what's going on. So see you guys in the next episode. See ya.